Right, good afternoon, then everyone. On Wednesday, the 6th of March, as we approach some important economic data prints throughout the rest of the week. So, got a couple of things we need to look at the economic calendar. We've got the Bank of Canada, which hopefully is going to provide us with a pretty decent trading opportunity. We got some things on the US front that we'll have a look at as and when we get to it a little bit later on in the video. But we're going to start with the Bank of Canada. All right, you can see today, Wednesday, 6th of March, you've got the Bank of Canada with their latest interest rate decision. Now, you got to kind of look, right? Interest rates are not expected to change, right? We know that consensus is at 5%, right? But got to have a think to ourselves, where could markets go from here? Now, they kind of dropped the rhetoric at their last meeting that they were going to hike interest rates again, or they were looking at hiking interest rates again, whatever terminology you want to use, right? So there's no chance of an interest rate hike again, certainly from anything they've said to us before, right? So we can kind of rule that out, and then we need to look forward towards when we are going to get an interest rate cut. And then you think about the reason as to why they hiked interest rates, right? They hiked interest rates because of the fact that inflation was too high. That's the same across the globe. That's not new information to any of us, right? So if we just go back and we have a look at their inflation print recently, right, they haven't talked about interest rate cuts or anything of the sort. But if you look at headline inflation year over year, actual 2.9%, a big drop from consensus of 3.3 a couple of weeks ago. Right, you look at core CPI, which they do say they are keeping an eye on. That is now at 2.4%, right? That is now a central bank which have a range or a target range for inflation between 1 and 3%. So headline inflation, if we click back in through here, right, once in June of last year they dipped below that 3%, but it's the first time, in a couple of years, really, since we kind of nearly 3 years at this point, or is 3 years at this point, should I say, kind of probably about March, maybe exactly 3 years of 2021, exactly 3 years ago, in probably about March in 2021, the last time that we were above 3%, bar that one print back in June of last year. So we've now reached inflation, or we now reached their 1 to 3 target band. So inflation is back within the central bank's target, right? We'll come back to here and we'll have a look at the core CPI. Sorry, I got to find it again, back on the 20th. Core CPI year over year, that is back 2.4. That has been below their 3% target for a number of months, right? Again, that wasn't below their target back since 2021. It has been below the 3% target for a number of months. So their headline figure is now back below 3%, and their core figure is below 3%, which is within that range that they target of 1 to 3%. Right now, if they drop their sort of rhetoric around they dropped the rhetoric around kind of future interest rate cuts, so they're looking to cut again, still ready to cut if necessary, if the economic data means it is necessary. They've not got strong growth. They've got 1% growth or GDP figures over the last year in Canada, plus they've got those inflation prints back in within their 1 to 3 target range. Right, so that would then suggest that the need for interest rates at 5% is probably a lot less than it was a number of months ago, right? They haven't sort of brought forward the prospect of interest rate cuts. They still say, they are still concerned about the levels of inflation and other things throughout the economy. But the main thing we're going to look at is their comments around inflation. Now, I don't see much scope personally for any upside on the Canadian dollar off the back of this, right? GDP figures being at 1% over the last year. Okay, on the unemployment rate ticked down slightly, which they want that to rise a little bit in order to keep inflation down. But ultimately, inflation a couple of weeks ago was back within their 1 to 3% target range. They probably want a little bit lower than just sat at 2.9. They probably wanted a bit more sustainably lower before actually cutting interest rates. But I do think on the balance of probabilities, an interest rate cut or a talk about an interest rate cut at some point within this decision and press conference is probably on the cards, right? You then need to come over to the Canadian dollar and then see what it's doing, right? The Canadian dollar over the last couple of weeks, really since those inflation figures, this is an index that I've built for the Canadian dollar. Canadian dollars across the board over the last couple of weeks have been down. Not exactly down by a massive pace, but are still down. You can see here back since mid-February has been trending lower. Right, so the Canadian dollars are lower off the back of the last couple of weeks. Right, that is also in the midst of oil. If you have a look at oil grinding its way higher since mid-February, it is higher. Okay, not by a massive amount, but that is still higher or more high than it is low. Right, so oil prices pushing higher should be positive for the Canadian dollar, but oil prices grinding higher, Canadian dollar grinding lower, which shows pretty strong underlying weakness within the Canadian dollar. So the markets are a bit negative surrounding the Canadian dollar anyway over the last couple of weeks. You work inflation into it, that is between the 1 to 3% band, and you have to sit there and look at this Bank of Canada decision now, 245 today. And on the balance of probabilities, you would say there's much more of a chance of them being dovish than there is hawkish. Obviously, dovish would cause some downside in the Canadian dollar, and that's what we're going to be focused on at this meeting at 2:45 today. Right, we can get really intricate with the analysis and look at a bunch of other things, but ultimately what I prefer to do with this analysis is kind of look at the black and whites, all these gray areas where there's different things here and there, and looking at every single thing in minute detail. Personally as traders, if we work at, say, a bank or an institution, we got teams of people who can help us to do this information. For us as personal traders, right, just trading for ourselves, if we just keep this analysis not to a minimum, because we do need to do our analysis, but look at the extremes. Right, the extremes are hike interest rates, cut interest rates, and do nothing, right, or at least chat about it. Right, they're not going to hike, they're not going to cut today, but at least involve it in their statement. Right, the main thing that they're focused on is inflation. There's obviously other aspects of the economy that are not performing well throughout Canada. I'm not going to go through every single individual data release, but the economic data in Canada is not by any means fantastic. The labour market is still fine. Apart from that, nothing is really that great in Canada. Not screaming recession, but not massively brilliant, right? So there is a sort of need for the economy to grow going forward for them to cut interest rates, but they cannot do that when inflation is still high. Inflation's back within their target. You'd have to back a move lower on the Bank of Canada today. Things you've got to look for is any sort of talk on interest rate cuts. Right? If they start to mention interest rate cuts, they're going to look at cutting some point this year, or it's priced in for them to cut in June. Markets are looking at a June cut for Canada at the moment. That is a situation, if they do provide some clarity on that, that is a reason that the Bank of Canada or the Canadian dollar should push a bit lower. There is obviously a risk they don't change anything, they don't mention anything about interest rate cuts. That might be a situation where the Canadian dollar pushes higher. That's not a situation where I will look to try and be involved in the Canadian dollar. So short Canadian dollars, I think, is the best bet. Whether you trade the release or whether you trade in the lead up to the release is obviously your question, how you sorry, how you choose to go about it. But ultimately, I think on the balance of probabilities, more of a chance of Canadian dollars lower off the back of this today than there is for Canadian dollars higher. If Canadian dollars do go higher, it's not a trade I think is worth taking from a personal point of view, right? Other things today, though, we do have a couple of other things. Jerome Powell's testimony is testifying the Congress, and we do have job openings from the US today. Now, what he says in that is obviously anyone's guess. We will look for some further clues in terms of monetary policy. Economic data over the last couple of weeks has not been positive out of the US. Yesterday's data print was interesting, though. We had the ISM Services PMI. Now, in recent data prints, certainly over the last number of months, bad news has been good news and good news has been bad news for stocks. As I said many times before, it's easier for the US dollar. Bad news is bad news for the US dollar. Good news is good news for the US dollar. Stocks, though, have taken bad news as a positive because it brings forward the prospect of interest rate cuts. Yesterday's session, we saw services PMI push stock indexes lower. A lower services PMI goes in line with a raft of weak economic data prints we had last week and the week before. Then yesterday had a bit of a flip in terms of stock indexes pushing lower off the back of that. Now, that did come off the back of the Chinese government disappointing without or with not talking about kind of massive stimulus packages in order to help their economy. So there's a bit of risk off trading throughout the day coming into that. We then get that data print and that continues to push stocks lower. We have had a bit of a bounce back this morning, but I think in terms of this, the job openings being a tradable figure today, I'm not so sure. You got the testimony at 3 o'clock at the same time, which means that could be a little bit tricky. So I'm not sure. I think I'd rather trade the Bank of Canada today on a short Canadian dollar perspective, probably not against the US dollar, right? Maybe short CAD yen. If you're looking a bit more medium term at the prospect of the Japanese increasing interest rates, there's been comments from ex-officials saying that they are looking at an April, or they feel an April cut or hike, should I say, an exit from the negative interest rate cycle. A hike in April seems realistic for the Bank of Japan. So I think short Canadian dollars against the Japanese yen would be a pretty good shout. Ultimately, sterling CAD's probably not a bad bet as well, and some upside off the back of that. I'm not sure I'd go near dollar CAD though with this coming out at 3 o'clock. But 3 o'clock, Jerome Powell's testimony plus job openings. If those job openings come out weak, they miss consensus. I'd rather sit and wait and look at equities' reaction to that than go and trade equities. If you're going to trade something off the back of a weak print there, I'd rather be short dollars than anything on equities. I'd probably stay away from that just to see, do we get a line up with that services PMI from yesterday? Do we get a weak print and then stocks go lower again? That is important for us going forward, looking at data prints to come, right? So job openings, again, it's not the most important figure. Do this ADP employment figure at 115. Again, that will be a figure where we can analyze what happens with stock indexes, but that will kind of set us up nicely if we can get a weaker than expected print, see the reaction on stock indexes as we head into then NFP on Friday. That gets rid of Jerome Powell's testimony. We can get his thoughts on things, and we can kind of cross that bridge when it comes to it a little bit on Friday. But for now, Bank of Canada, probably short Canadian dollars. Again, I'd rather be short US dollars on the job openings on a miss, right? We'll keep an eye on that. But then we got Jerome Powell's testimony, what he says will likely shake up markets a little bit more than job openings. So let's keep an eye on these US data prints today. Whether they're tradable figures is another question. Still be looking at markets when they come out to see the reaction. But ultimately, that testimony at 3 o'clock, let's see what he has to come out and say. We'll analyze the price action off the back of all of this to then see what we're going to do on Friday. But for now, Bank of Canada, main focus of attention. Let's see, do they send the Canadian dollar lower?